So the vast majority of retail investors will lose money, and it's become apparent over the years of having a YouTube channel, reading pretty much every comment and having a chat room that one of the key reasons why people lose money is they do not take profits, or they take profits at the wrong time. They see a stock rally and then they rebuy in with FOMO, and that downwards death spiral starts, and then there's just no recovery and they end up taking big losses. Now, it has been requested recently in the chat room on how to take profits. From a new investor standpoint, how do you lock in gains without missing out on the majority of the move? Now, there's a few different techniques here when it comes to taking profits in a stock or in an investment, and I'm going to give you 3 very easy ways to make sure you lock in gains without missing the majority of the move, and then finally leave you with what my favorite profit taking method is. Now, as a new investor, it might sound very simple that of course you buy low and sell high, but it isn't that simple. If we look at recent runners like AMC and GameStop, it's clear in the comments of my videos that majority of people are just buying and holding, and if you continue holding, unfortunately, you don't make money. It doesn't matter if you have $20,000, it's still unrealized until you sell it. You haven't made an absolute penny. For me, taking profits is just as important as having a risk level and risk management, and it's something that every investor should continue to look to improve on. And that said, it doesn't mean I'm an absolute genius when it comes to taking profits, but I just locked in a 50+% gain in Virgin Galactic, and I'm going to tell you why I closed that position as well, because it is a very simple rule that I tend to follow when it comes to investing. Now, that said, this is not financial advice. I'm just a guy who's about to shave his beard Britney Spears style live on the internet because I lost a bet with someone in the comments. And if you do appreciate videos like this one, do me the kind favor, make sure the like button is turned blue. It's massively underestimated how much it can help a video like this out, and in turn it will help out some other retail investor who is struggling on how to take profits on any given stock or investment. Now, over the past few years in the investing chat room, I've seen many people come and go, and even on the comments on some of my YouTube videos, unfortunately, many investors, subscribers have come and gone and never are anywhere to be seen. And one of the key things is profit taking. Now, new investors tend to do one of 2 things. One is they sell early and miss the run up, which isn't the worst, but it's obviously not the best. And the second thing is they do not sell at all. The stock falls to the ground and they are left holding the bag of this stock, sometimes indefinitely for life, because the stock might never recover. So how do you make sure that you lock in gains, take the majority of the move, and at the same time lower your risk level? What is the secret sauce? What do the hedge funds do that retail investors do not do? And it is taking profits. That's all it is. It sounds simple, but it's not that simple, because people genuinely are greedy. When they see a stock go up 50%, even sometimes in a day, they think it can go up another 50% tomorrow, and they don't lock in gains. Majority of people are greedy. It's that simple. For example, recently, a couple of months ago, I bought into Cineworld Cinemas. I bought it really at the bottom. I had like a 22 pence average or something crazy like that. It went up like 400-500% at one point, and I was left with a big dilemma. But I took the logical opinion. I locked in my initial investment plus 20%, which I would be happy with in a 6-month period any day of the week. And now I've got the rest riding. So that's a good example in itself, but that isn't one of the 3 I want to talk about. So if you're still with me this far in the video, one of the easiest ways to do this is the 10-to-5 rule. The 10-to-5 rule is dead simple. Every 10% the stock goes up, you take 5% off as profit. Now, this has some pros and some cons, and I'll come through them in just a second. But this, for me, if you're a new investor, is something you should really try out. You can even try it out on one of the bigger names like Apple, because you do get that move over time. But it gets you used to locking in gains regularly and sticking to the plan. A lot of investors would think, do you know what, I'm not going to take that 5% because Apple's up 10, I'm going to let it ride because I'm missing out on gains. But if you stick to this plan, it actually gets you used to locking in gains and sticking to the plan you might have made years ago. Now, some of the cons here is you might be in a position for a hell of a long time, longer than you actually should be. It requires a hell of a lot of discipline because it usually takes a long time to close out your full position, and it is quite hard to manage. The only real way you can sort of manage this is put in limit orders that are open indefinitely, but that depends on your broker, and then that way, as it triggers, you're going to get out of your positions. But then what happens is people lose discipline and they will start canceling orders because they want to make as much money as possible, and that's where retail investors really do mess up. You can change your plan, but for me, when I tend to change a plan in a stock, it's more on moving up my risk level rather than my profit level. And a good example of this is I did actually sell Apple recently. I got in, I locked in some gains, and I wanted to buy it lower. I feel the tech sector was oversold, and lo and behold, people were even calling me an idiot in that video. A couple of weeks later, the tech sell-off started, and that's not to brag, it's just an example that my initial investment in Apple, the whole goal was to make around about 15% in a 6-month period. I did that. I actually think I got like 22%. I locked it in, walked away, and then Apple started falling. And at the time, I felt great because I had invested that money into another ticker. I'll come on more into that process and thinking in a little second. So this 10% to 5 rule, you can obviously be more flexible. Every 5% it goes up, you take off 10%. But don't forget the biggest thing here is that it's getting an investor used to taking profits, locking in gains, which is definitely not a bad thing. Nobody ever went poor from locking in gains. Now, number 2 really for a new investor looking at taking profits in the stock market would be a moving stop loss. Now, these are really underlooked in my opinion. I actually use this I still even use it today actually in some cases. As a stock goes up, I just keep moving my stop loss up. For example, if my stop loss is a 20% down on any ticker, so if Apple fell 20%, I would be looking to sell that ticker because it could go down another 30. Now that might sound counterintuitive because if Apple was falling 20%, I might also be looking at buying in that, but that becomes down to allocation. In this example, I'm talking if I am fully allocated to Apple, so let's say 5-6% of my portfolio, which tends to be how much I like in any one stock anyway. Let's say I'm fully allocated to Apple and it falls 20%. There's a good chance my risk might even be 10%, not even 20, but let's use 20% for this example. Apple goes up 10%. Well, I move my risk level up also with it, and eventually, as Apple continues climbing in this example, my risk level will get to break even, then 105%, then 110%, and it will go up with the price. Now, this is good for 2 reasons. One is it's quite easy to manage, and you can be very robotic with it. And it also means is over the long haul, you will start locking in majority of the move. It's a very easy way of making sure you're safe too, because that risk level should come up with the price of the ticker, provided it does go up. And please remember there, this is not a video on risk management, it's about profit taking. So as the stock goes up, it works in your favor, keep moving your risk up. Now a good example here would be AMC and GameStop. I don't know when you're watching this video, but right now these tickers are really running, and I keep mentioning to people that if you're in it, keep moving your risk up. If you're up 200% in this stock, that's great. You should be at 150% of your initial investment at worst case. That way, worst case scenario, you've made 50% and you're safe. And then just keep moving up this stop loss. Keep moving it up and it becomes a no-lose trade and you're guaranteed to make money. In that scenario, of course. Now, there is a bad sign when it comes to moving up your risk level is if you have that limit order set in stone, market makers can see it. So you see a lot of tickers where they fall violently in one day. We can even look at Cineworld on the day I bought it. It fell all the way down to like 19p at one point, way too much in one day. And that was just stop losses getting took out all the way down. And when I realized that very quickly in the morning in the UK, I started buying in, because once the stop losses are out, shorts are going to look at covering because it was too much too fast in one day. And that's the downside of having stop losses, because the market makers can see it and it can give you a bit of a disadvantage. But in my opinion, once a stock goes up, even if you just wrote it down on a piece of paper or in an Excel, you can move your risk up mentally and you can manage it that way yourself. Now, it wouldn't be a true video if I didn't plug eTORO here. If you don't know, eTORO is one of the brokers that I use on a day-to-day basis. You can go and check out my Coffee to 100K portfolio there. You can even go and copy it. And if you sign up on the link down in the comments, you get access to the eTORO chat room for live at no expense. So if you want to join the eTORO chat room, there's details down on the pinned comment. And yes, of course, eTORO do have risk limits where you can keep moving them up. And they also have take profit levels that you can set in stone that trigger automatically for you. Now, number 3 is not necessarily something as simple as before. There's a simple saying, buy the rumor, sell the news. Now, this depends on what style of trading you're doing, but it's something that I see majority of people mess up on. Some people buy into a stock or buy into even a cryptocurrency with the anticipation of a news article, a lawsuit, or something big that's going to happen to the company soon. A good example really would be NEO. Recently, they had a NEO day where everybody was hyping up, they're going to conquer the world and put EVs on the moon. And of course, I'm exaggerating here, but what happens is all this hype comes up and people are expecting revolutionary things. And then what happens is the stock actually falls after the day is over. Buy the rumor, sell the news. And this is a good example. So if you are like in a company like Neo and you see the internet going, doing what it does and saying this company's just going to do crazy stuff, and you start seeing your position go up 10%, 20%, 30%, and then when the news comes out, 9 times out of 10, it's very underwhelming. Now, there's been a good few examples of these recently, and I've been talking about them in the WhatsApp group and also on Patreon, so if you want to check out that, it's also down in the description. But again, spaces are limited on that because I don't want my phone going off every 2 seconds, especially when we have people over in the States, Australia. It's a bit crazy in there, so limited space available. Check it out on Patreon down in the description. So how do I do it? How do I take profits on any given stock? What is my methodology and what is the simplest way? What has worked for me year on year, time after time? It's very, very simple. If in doubt, sell half. Now, I don't always sell half. Sometimes I sell a quarter. Sometimes I sell a third. Now, if I look at a ticker and I think, even just remotely, think to myself, I should be taking some profits here. This is up way too much, or it's even at my goal. But I think it can go even further. My plan has changed. My risk level has changed. What do I do? If in doubt, take off a quarter, take off a third, take off half. Now that could be half your profits. It could be half your total position. That's really up to you. But if in any shape or form, I have doubt in my mind, or I'm questioning, should I take profits? That's usually a good sign to take some profits. So that's the biggest thing I can say. That's genuinely how I do it. If I see that my portfolio is going up and I look at a tick and I'm like, this is becoming more than 5-6% of my portfolio at any one time, if in doubt, take half off. That is genuinely what I do. It's not genius. It's not some revolutionary algorithm that hedge funds may possess. It's not that I'm a lizard person with Queen Elizabeth who's on the $100 bill there. It's just that easy. If in doubt, sell some of your position, especially if it's green. Because like I said, nobody went poor from taking profits. And I don't know who actually said that quote. It might be Warren Buffett, but I heard it somewhere and it stuck with me literally for years now. Now, if you are watching this far, there's 2 things I want to cover. First thing is the code word, because if you do comment the code word down below, I know you've done the business, watch this far in the video and help support the channel. The code word for this video is paper hands, because if you have paper hands, it means you're green, you're selling, and well done to you. But the second thing really here, if you've made it this far, and it's the biggest thing I can really mention, a lot of people, especially new investors, will sell out of a stock and then continue watching it. If you're fully out of a stock, take it off a watch list for a good few weeks so then you're looking at it with fresh eyes. I know many of an investor, including myself, who have bought a stock at its highs because you sold too low, got FOMO and just watched it doubling every couple of weeks or every whatever, and then they've rebought in at the highs and they become a bag hold for life. I've done that myself. People continue to do it, but that is the biggest thing I can say is if you lock in a whole position, a full position, take it off a watch list, do not look at the chart, try not to look at the news, and move on. That's what I can tell you. And if you do that, you will have a better chance of survival and a better chance of surviving and being one of the few successful retail investors out there. So I hope you found these tips genuinely helpful. If you want more videos on this, let me know your ideas down in the comments and I'll see what I can do. If you watch this far and you haven't hit the like button, I am severely disappointed in you, but I still wish you the best and I'll see you in the next one. Take care. Peace.